Guys, hope everyone's good today. So today, we're gonna be looking at Ger30. Then we're now looking at it uh, from our perspective. Then it's the second week of the month. So the second week of the month. So now, second week of the week, around about, but then it's the middle of the month. So now we look at the market, the H4 market, because now we find our our trades there, right? As our system actually works. Then we find actually we take that the 4 hour. So now we fix our quarter points now. So now today I'm gonna start it off by how to plot quarter points. And let me start it from the beginning, guys. So now so that everyone gets to see how to plot quarter points. Now I'm teaching how to plot quarter points now. Right now, let me plot from uh from uh, from 15,000, right? Now it's a clean market. You can see, guys. Start off your week on a clean market. We start off from 15,000, right? That's 15,000, guys. Then you go to your 15,000, 15,000, and 16,000. Then you come to our 15,500, right? 15,500, right? So now the separation is about 15,500. Then you go to your separation between it's 1,000, right? From two. The separation is 1,000. Separation is 1,000, guys. So now as the separation is 1,000. So now our quarter points get to go down and then break it down to 250, right? 250. That's that's a simple way, a simple order that you can make it. Then you can go to a 750. You go to a 750. And then you go to a 750 thing. And but then you have to place them properly because it's important now to place them properly. Important to place them properly. Place them like this. And place them there. They're fine. Important now because now a rejection can reject of that quarter point, right? Like this, like you see, what I mean, like on this candle, to the top side. Look at this candle, look at that week, that week rejection. It rejected exactly on this point. Exactly on that point. So now, because now we're only practicing this week, so we don't really have to place that. Unless if you want to practice this what happened here, but then no, we're only looking at what happened right here, right, guys. Then let's move on. Let's get onto it and see what's happening. Let's get onto it. Let's see. Now we start off on Monday. It's a Monday. It's our Monday here for this week. See, on this week we're only on an up trend, trending up. We didn't have what you call this a range. We didn't have a range for our week. So it was a proper week for us, right? Looking from this perspective of what happened during the week. You can see that it was a proper week. So it was a proper week for us. It was a proper week for us, right? As you can see, okay, from some, it was a proper week for us, guys. So from 250, from 15, from 5 to 50 to to 7 to 50 to 15 7. As I'm saying 250, like this is what I mean, like, from 250 to 750, like there was only like up result, right? And you like we would have and now how we use our market system is that we're gonna take our take profit here and re-enter again and 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 came out here, right? But then in terms of our entries and our take profit system, that's maybe I'll touch a bit on that, right? I'll touch a bit on, but then I hope you understand how we got our quarter point. Right? That you see how we got our quarter point. How did you see that how we got our quarter point? So we get this 15, right? No, it's 17, guys. I was doing it in Nasdaq, right? Also, it didn't get to me. Let's see. Let's enough our first trade. What we would have done our first trade? Let's see. When the market came in, right? It was Monday. It was Monday. See, Monday there was on a bit of a play, right? It play around this on a range, completing this range, completing a particular pattern, right? There's a pattern right here. If you go down to 1 hour, you can see that there's a particular pattern, right? Making this double bottom, right? Double bottom, right? And I was playing around during this day. Right? But then we don't usually trade on Mondays, right? So the reason why I don't recommend like trading on Mondays, you can find your like on different type of there's different type of business that you're not supposed to or indexes that you're not supposed to trade on Monday because now the movement during the week and beginning as on Monday it's maybe you're not supposed to like trade trade it like specifically like speaking about like watching through what watching like looking at what happens throughout the day, right? Like the entries and movement and how it moves. It's not the way like to trade it like that. Uh, but as well, it was playing around, yeah. When I played around, right, completing this person, then it came and made it engulfing, right? So now this time now looking at our time of trading, it made an engulfing here. And as it made an engulfing, maybe that also maybe a time when to enter and look now right there. What about that? Right? Some other instrument that we that we use. The other instrument that we use there. So yeah. Now let's look at why we do not trade on Mondays. Usually know this why now the reason why I trade on Mondays. Usually know the reason why I trade on now the difference today. So we do not trade on Monday. Like usually our system when we like trade our system, there's a our entry is supposed to be right here around here and around this part. eh, Around this here, around the structure. That's our entry. And we don't usually hit like our stop losses. Now look at this here. Look this here. So now we were gonna enter somewhere right here because now of this candlestick, right? Okay, plays around, goes up, right, in profit, but then it comes down to stop loss, and then it goes down, completing what it's doing. When you trade from the week, it like shoots up. I'm expecting it to shoot up. Always like expecting it like to shoot up from the week. As focus of our we've seen actually the income it moved what what moves it made. Right, guys. So now we're gonna come back. So now you can see now. Maybe we can consider this, but then no, don't consider this. Okay, this close up. I'm seeing close above here, but then again, I'm just gonna come back and hit our stop loss, right? So so we don't. That's the reason why we don't trade on Monday. So now there's more stop losses. Looking at this on at this Monday, there's gonna be two stop losses hit. So now that's why you don't look at we don't like trade on Monday like that. And let's move on to our Tuesday and see what's our what occurred on Tuesday. And as you look on Tuesday, you can see like there's no structure on there's no inner structure. Yes, there's no inner structure, but then we have having our structure here, right? I'm trying to show you what's the reason for our our entry. Right. I'm seeing this structure like this. Seeing this structure. It resulted in this market making an engulfing, right? Very engulfing. That's where was gonna be our reason for entry. Now this engulfing candlestick, right? As it broke above, but this is during Monday. It's during Monday, and throughout the night it played around, right? That's why you don't trade in the night. Right? But then on our 8 hour, right? Maybe you're gonna be looking for sales here, sales, right? But then only to find out then on our entry system, right? That we are gonna be going down to our 5 minute, where it's not going to allow us to enter this trade, right? But then the market chose to reject upon this structure, right? Was upon this inner structure, it broke above and rejected with an engulfing, so resulting in making this impulsive candlestick. That is what was going to be our first set of entry, right? Because that was going to be our first set of entry. As soon as if to apply something, yeah, I'll come back to it. Come back to it now. So let's be on the entry. Okay, analysis part. So now when you trade, guys, you first like look at your analysis, right? Analysis, then your aim, then your take profit. Those are three main part. And then your risk management. That's just your fourth part that you look at, right? So now our analysis on H4. This is what we're looking at right now. We see that it broke above the structure, right? That it came back and resisted rather than engulfing, right? Times that you trade from, that's part of your analysis. The times that you trade from as from 8, right? From 8 until 8 until 9. Some trades maybe might find them at 9 if you're trading on the H1. Let me see. But, if you're trading on the H1, it was okay. It's from 8 to 8, 8 to 8. So that's time to trade actually, right? Now let's look at our please take that down actually. Let's look at why our entry now, our second part now. Our first analysis that's done. Now we're looking at our our entry now. Our entry, our take profit entry also has a stop loss and that. Now let's go down to our 5 minute. Go down to our 5 minute. Okay, let me see that what's happening with that entry. So about that. That's before do that, do this. Now if during the it makes that's like testing, right? So now I can pull out this tool, right? And choose which time that I wanna see and specific what's happening on the lower time frames at the specific time. You go down to our time. This way we backsisting, right? I can show showing it out small. Just open it up and show you guys. Okay. I don't know. But then go down to our then this tool is just gonna show us what this tool is gonna show down. It's gonna show down on the lower time frames. So I'll try 5 minutes, which then our entry time frame. You go back to click on it, say go to, and it goes exactly where you want it to go to. Right. And then our time frame is in terms of our entry now. We turn now to our entry now. So when the market just opens with an engulfing, it was an entry for us. But then in terms of our it's okay, I'm wrong. Looking at what's happening here, right? So when we first come into the market now, we look at our left structures, right? You come into the market, look at your first structure, left on your left side of things. This is the left side of things, right? And then you see that you have two, you have actually one structure, right? For the structure, but in the market decided now to reject on this angle, right? So now if we have our structures, we expect the market to come back and reassess the structure, and then that's where that's when we look for our entries, right? But then if there's no structures here on your left side, it has to be like recent, like fresh new structures. If there are no structures, then this engulfing we consider it as an entry because now we're not expecting the market to come down and drop down below and to resist the structures. That's our entry. That's our entry system, our entry rule now. Like that. Okay, let's make it with this small penny. Look at the small candle light showing right that as our point of entry. This is of our structure, as you can see, like that. But then usually I was gonna like market, right? Because now market can come shooting down, make your structure and then goes up. But you notice it came to resist on the first structure. And let's go down, let's go back to our H4. Usually your stop loss is obviously below the yeah. But then before we use the tool of take profit and take stop loss and take profit. We use that tool of stop loss and take profit. Let's go down to our candlestick analysis. We just then look to our H4 and see our take profit. Sorry about that, guys. I don't know what I'm press something bad mistake. Let's go down to our which is always our H1 look at what well okay doing the TP system doing this okay using this take profit system our usually our second structure that we see as our take profit but now we're having a quarter point here. Our quarter point can be the reason we want to make our TP now because now the market moves from one quarter point to another now as it was coming like this up now we're expecting the market to continue pushing up because now that's how the market usually moves from one CP to another. Why it usually rejects? The market can reject and not like go to another quarter point because of the signal structures, as we can see as you can see during this time, just during this past previous candles, right? But then now focus on those candles. Let's see if there's any structure that's what's gonna like disturb us. Mm, mm. This is actually confirming our close above, right? That's confirming our close above. Close above, this close above is it's confirming our entry, like our reason for entry, which is then the first rule and or the first rule, right? Yeah, that's the first rule. Then you go down to our, and then you go up, right? But then let's look at our side. Let's look at this type of take profit, right? Take profit is our next structure. our next structure points. Then this is our first take profit. Like that, as I was explaining that is your just take profit. It's not your first take, it's your take profit, right? And then when you place your TP, right, you stop using your take profit. Which then that's our looking at our second row when you place your int on the platform. Then let's see how we're gonna place our just place our stop loss and take profit. So that's our quarter point, guys. That is our and our stop loss. Our stop loss, our stop loss. There's our stop. There's our take profit. There's our take profit. There's our stop loss. That's that's one of our first trade for the week. This is one of our first trade for the week. Let's focus our H4. That's gonna be our first. And immediately the market opens up for us. Then we are gonna have our second entry. I think during the same thing. Throughout the day, we're gonna have like two trades. Right? Because now the market made a close above, right? The market made a close above for us and hit the quarter point through. Right? As it hit the quarter point through, we had this structure. Right? With this structure, actually, I'm looking at left structures. I'm seeing what is happening to these left structures. Alright, guys. Um, we hit our left structure, but then we broke above, right? I'm looking at our second entry, and the reason as we go back to the analysis, right? Now going back to the analysis, as I showed you the 4 steps now, the 4 points now that we look at now is our analysis, our entry, the result, our take profit. Okay, there's different types of or rules to now taking profit, right? Okay, and then our forex management, right? And that's we're looking at our percentage, right? Our percentage, this percentage of profit or percentage of loss. You don't take like do not take when the loss is greater than it's in now going with our entry. When the stop loss is greater than 10 or 15, that's just too much, guys. Unless you're willing to make that type of risk. Right? But then you have to. It depends on how much you have actually on your account. It depends on how much you have on your account and what type of a trader that you are. But then with us, just consider that percentage now. Don't take trades that are more than 10 actually. If you're trading on a stack, if you're trading on a stack or on a stack on 730 on index platform and you're trading that standard lot size, don't trade it like on standard lot size, guys. But then but then 70, like our profit percentage is like 70. Like that's like not the highest, but then the proper. I think it's the lowest actually. There's actually more. I will show you a trade that is more. Sorry, that is a trade during the week that had more. But then it actually depends on how much you have on your account, right? And how much you're willing to risk. We'll have a video on that actually on risk management. and risk management. Let's go down to our second entry, guys. Our second entry now. I'm marking the structure. The reason why I'm marking the structure, as I said, I was looking at this, so now I'm just marking it like for not explaining. Sorry about that, guys. I'm marking the structure now because now this structure now you have to. It's our inner structure, right? It's our quarter points now, and that's our inner structure. Structures that are near your quarter points. You, you can mark them as point of of of, of take profit, right, or rejection, right? But in you can mark them like also this one, right? The market tends to react on it. The market tends to react, right? For German 30, there are some pairs that 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 we don't mark. We do not mark the structures, right? Right. But then for German 30, please do, right? This is our inner structures. Our inner structures, guys. Now let's go down to our go down, guys, to our let's go down to our 5 minute, right? Our analysis says that this is our entry, right? Goes above structure. Now we're entering now our second entry now, and and then I'll show you now why our TP was gonna be further to that part of the side, lot of things. Yeah. Right, guys. So as we are doing, yeah. So now as we're doing our second entry on our second entry on our second entry on our second entry on Tuesday, right? Now we came on the part four, right? So now and did our analysis. So we're doing our analysis now, our entry now, our entry zone and then our entry point, right? Let's remove this stuff. Our entry zone and our entry point. Let's say our entry point. So on the date, right? So now as around about four, so let's see. Let's see for now. What's happening around four, but then let's remove this. So I was showing you how to enter, right? But then let's go down to four, right? Now see, guys, might seem small candles, but then don't forget on the 4 hour time frame, right? So don't forget that. Now this is our 4 hour, right? So now on the interest side of things, right? And then this is what this occurs. As I was explaining on the previous entry, that if there's no candle, expect now an entry on immediate entry in this candlesticks, right? But then what occurs is that it would have an entry, but then the market came down now. Now it's made our stop losses, right? We paid our stop losses. But in the market in this instance, the market in this instance it's making a double bottom, right? Because on this very much structure, making a double bottom on this very much structure, right? So it is our stop loss that will make a double bottom for us. So now our entry is gonna be here, right? Even though it's at our stop losses on this entry, then made it an entry for us, right? But then in some instances, right, guys, the market tends to just shoot up after making this type of a kind of stick of engulfing, right? And with no left structure. But then it's a double bottom, right? It's a double bottom for us. We make it double bottom, right? Bottom up, and then short up, the upside, right? Let's put our structures there, right? Outside thing. Let's see what's happening, right? And but then can you explain one more thing before I make the take profit? Right? This is what you take it as an I choose to make it an entry, right? That's the market. Usually, we expect the market to make a. This looks like a head and shoulders. What's a head and shoulders now for those who don't know what's a head and shoulders? I make it full screen. For those that know who don't know what's a head and shoulders, a head and shoulders is a type of formation that is. Let me put it here. This about this type of formation, like okay, so you can see it. Yeah, this is a head and shoulders. This is a head. This is your head. This is your left shoulder. This is your right shoulder. This is now your head and shoulder. But then they're not supposed to be balanced. They they usually balance, but then no, I'm wrong. For a human being, for a human being, the head and shoulder has to balance. But then on the markets, they do not like balance. That's why maybe you find your right shoulder it's way higher, right? But then this is what your head and shoulder is, right? And now in this instance, I'm trying to explain why the result for entry after on the head, right? So now we're having like this is your left shoulder, this is your left shoulder, this is your head, this is your right shoulder, right? Then let's come back to other head and shoulder type of formation, right, guys? Keep drawing, quick drawing, guys, quick drawing. The let me show you surround. Okay, so the podcast, guys. Explaining this tool. There's an entry on that track. Try to find it's like to draw the head and shoulder, but then I'll most of you guys understand right, what I'm trying to. Right, this is the head and shoulder. I was trying to find out a tool that I can use show you guys, but I'm not finding it. Right. The report that guys. Let me explain this again, right? So now then you get back on track. Find out yourself again. This is a left shoulder, this is a head, this is a right shoulder, right? Let's go back here, right? This is our structure, right? So now as you're expecting it, a head and shoulder type of formation, it usually forms here, but then it's not like on lower time frame is more wider, but then on this time frame, okay, it's simple in this form, right? So now we put our as we're expecting, that's the market. This is a confirmation of like a ratio type of form is forming, right? But then in this instance, now because maybe the market, because now the market ended to impulse, it didn't come back to make a head and shoulders. So now I decided to just impulse and break this. So okay, and then the market usually close above this. The market close above this, right? Expecting it down. Expecting it to close above, right, and then come back, and then goes. But then just close, it was close above, and then it just continued and made and changed the formation that it was supposed to form to from a continuation pattern actually, right? It broke correction, and then continued impulse, right? But then it didn't do that. So now our reason of entry now is because now we made a close up of this neckline. This is a neckline for us, right? That's what I put here. This is a neckline, right? The market continue and moving up to the upside. Because that was gonna be our reason of entry, right? Like do not enter like okay, seeing like this kind of thing, and then we say like this is a double bottom, right? No, let's maybe confirm. Unless if the market strikes upward and engulfing, then you can confirm. There's some type of entries that come in that moment, in that in that form, right? If this was gonna be an engulfing, it can get similar to this. So we're gonna enter because it can like continue moving to the upside, but then it decided to make a play around and drop first before it make this candle, which is the candle that we mostly uh, like that gives us our confirmation and that uh, that reason now. That confirmation that let's enter now this trade. Okay, that was our end now. Let's put our stop loss. Looking at it, our take profit. Our take profit for this it's way high. As you can see, guys, I'm already on 47 pips, right? Just counting it. And the other one was on 70 pips, 70 something pips. So, but then for this one, it's way high. And that we're gonna gain more. That's why that's the reason why the entry was a bit tricky, right? It's just not a type of entry that we usually have, right? So now before the market shoots up, it's gonna want to make some confusion, right? And then we get confused that what's the market up, what's happening in the market. But then as I was saying, that we usually have our right shoulder, but then in this instance it didn't come, right? Because now the market was impulsing, right, to the upside. Now the market didn't want people to catch that end, right? Because now it's more pips, right? You know, I'm going to um, um, deeper knowledge of forex now, because now we have market. Let me just get into the circuit after showing this entry, right? And I'll explain. I'll explain dwell into why the reason for that, right? The reason for why the market doesn't want us to that entry, right? First reason is simply because we're winning more, right? On this end, right? You're gonna gain more, right? Because now impulsively is 1.6%. That's a huge raise. That's a huge gain actually now. So now we have market after market, and we have market not makers as such. We have brokers, we have market makers of brokers, right? And we have the banks, right? That we are trading against as retail traders, right? Our trading against now. So now they get if as you lose money, your money goes to a certain, well, not to the market, right? But in the market as market makers, right? So we have people that we call them market makers, which then we can call them as part of the brokers and everything, everyone now. And we have also different type of brokers, right? Which then benefit from you losing, benefit from you winning. Now there's deeper knowledge now. But then don't be discouraged like this, right? Yes. So now the market makers, we have the people that gain in the big banks. So now we're trading against the big banks. So now that's why the market is it's always gonna be there, right? The big banks actually get some type of trading against them. Yeah, as you lose your money, like you lose your money to them, as you gain your money from them. So now it's a big pool now. They have the banks, you have the retail, they have trust funds, also everyone in that market now. So now they in how they trade, actually trading against us, and actually we trade with them or we trade against them. In then you get to profit, in that you get to whatever. In that you get to profit, in that you get to lose actually, right? But then you're more on the winning side. So now that's why you have to like find a system that gives you a benefit and give you advantage to how the market trades, right? And so how they trade with other people, how they trade as right, trade, right? So find an edge in the market that is gonna help you now to win, to win. Whether the market's going down, whether the market's going up, whether the banks or transfers are buying, but the people in the pool are doing. This is what they do, like find a system that's gonna work um with or against them, right? But then you don't actually know that now they're working against us or they're working for us now. But then in this instance now, they don't want us to catch this trade now, right? As now maybe they'll make it like they make this they make this so how they make the market move now is in terms of money now, right? In terms of money now. In terms of money, they're pushing more money now to pump up the market. They withdraw money now to make the market go down. This is deeper knowledge, right, guys? We get into it when you like done with most things, right? Then learning the basics and what's the when you go into the fundamental of it, but it's deeper knowledge, it's deeper knowledge, it's deeper knowledge, deeper knowledge. As I explain, I want to explain something what fundamentals also. Fundamental only effect will be like 2 hours of a day or 4 hour, and then they choose a certain direction, right? And then they meet the market they direct the market, right. But then you have the big the bigger people, right? The bigger people in higher who already know what's gonna happen, right? But then it's deeper knowledge, guys. Let's just leave it there, right? Guys, let's go back to it. Go back to it. There was our entry. Let's go to the 4 hour. Go to the 4 hour and see what's happening on the 4 hour. 4 hour market. So what TP is this, right? Okay, but then let's not let's not know the structure. So the structure right there is this structure, right? This structure. If you didn't have a trade, you're gonna take a second. Okay, if you didn't have a trade, it was gonna be our trade, right? So now our inner that's the function of or the reason why we have inner structures. You get like in you can use it as a TP, but then for this entry, our TP was this. That's our TP this because now the inner structure we don't really take it as a TP. We use it as a TP unless okay, our rule of take profit. Okay, I'm some check of my our reason of for take profit, right? There's quarter point. Usually skip, not skip as such, but then prepare your quarter point is take profit, right? Because the market moves from one quarter point to another. I'm gonna keep on singing that song. The market moves from one quarter point to another. Let's keep that in mind. Always have that in mind. The market moves from one quarter point to another. But then we skip, we choose now to not make this inner structure our take profit. The function of this inner structures is only a close above or a rejection, right? But then in this instant, the market will never reject as it has as this structure had already rejected and played around as opposed to play, right? And then its function is is just there now to prove okay we're marking the structure, right? The market can me come back to it in the later times, right? But then you skip that market, right? You skip this, right? You just place it there, right? And see what happens. So we could have found your second entry, right? So you could have found your second entry on it, but yeah, every trade in eight even more, right? That and make like more percentage and one more on your percentage, right? And the entry on that, let's see the entry on that. Let's see the entry on that. Oh, it's even even the view, see, even it's even more better. There's you see it's an open entry, open like candlestick entry. If I may call it an impulsive candles candle entry. Right, the market candle this candle open on the 12th, right? I think it opened with an engulfing on the engulfing on M5. So no, it didn't even come back down, just impulse in that impulse. That's gonna be our second entry right there. It's gonna be our second entry, right? Now do you see now the function of this inner structure and what it helps and where it helps and how it helps us, right guys? So now in this structure was gonna be beneficial to us in such a manner that it's gonna make us have more entries and have more percentage adding to that 1.2, right? That's 1.2, 1.224. Now we're adding to it 0.54, right? But then using the type of entry that I was talking about before, like the market can open with this engulfing and then it just impulses to the upside. But then in this instance, the previous one, it didn't happen like that, right? It played around, right? Played around. And this goes back to what I was explaining, right? But if like there's more presence it likes to gain, the market doesn't just play around and like lets you like just it's like to be sharp on it, and be like play like game, right? Play a game, but then stick to your risk management because now is the reason why risk management is important. Right? Okay? Now it was gonna be our second engine, beautiful engine. Done. That's good. You can see that our stop loss percentage is 0.6 there. Yeah, 0.12 there. It's a bit higher, right? It's a bit higher, bit higher. We should get high for us. Right, high. But let's maybe see. Let's see if I was chased this point. As it's still on 0.12. Still on 0.12. But I don't know for a bit. A little bit high, but I look more gain. Looking at the gain of it. There's risk management. There's make a video on it, right? Look at risk management. Okay, that we can that was something that we can say. Okay. Let's go to our H1. Oh, no, let's move on to our 4 hours. Let's see. This is one section. I told you still choose okay. So choose the ON plus choose the this one say. All right. Yeah. So some okay. There's something that I what I but then I'll put it later on. It does it's a bonus point. It's a bonus point for you guys. Right. Move on into our last entry. Like okay, first okay now we on Wednesday now. Moving on to our Wednesday chat. I just forget about what we talked about now. Moving down to our Wednesday chat now. After taking that CP, right, it's the market continues to play around, right? Then it made a rejection. It is a rejection. I don't know what the reason of a quarter point, right? And now we have quarter point. So now we've got in the market now wants to reject now, right? Some people would have wanted to take a, a, a sell here, but then time look at the time now. Time is 12 now. 12 not supposed to trade. So now looking for a sell over there. For my system, for us, right? Some people for the system that we use, we're gonna be not trading now. So now we're not gonna be take that loss now. Some people are gonna take that loss now because now trading now in the night, late now in the night now. You using the same system or that we're using, they're gonna take a loss now. So you lose out on something, right? Because now trading in the night. Not that trading in the night like it's wrong, but then you the use system that we're using that we're using that's gonna make us lose. So now we do not like take that trade now in the night. So now the market now was looking for the impulse to the upside now. Right. I'm looking at this, but then the rejection of any structure. Right. The rejection of any structure. So now for us to check inside. But I'll show you something at the end of the video, which is a bonus point. Surprise for you guys. Right. Surprise, surprise, surprise. Wait for the surprise. Wait for the surprise. Wait for the surprise. Let's see. Okay, I was just no. This Thursday came Thursday now. Came opened up. Okay, open up this impulse now. Of course, now it's for right opening the market at 8. Okay, opening with this impulsive move. Some people will say, why are we not entering that trade? We're not entering that trade because now we didn't reject off any structure, right? We didn't reject off any structure, so now that's why we not entering that trade. Right? We didn't reject off any structure. So there's no structure for us to say okay, now let's enter I will reject it. No, don't play like that. Now let's see. In looking at our okay, as okay, we break the quarter point on 8, break the quarter point now. Looking at 12 now, it's an entry there for us, right? But then the market comes down, it does boom, stop loss. As the market is up with a stop loss, the market it's as with a stop loss. As the market out is with the rectangle stick. Okay, let's just look at it. Let's just look at the entry. And on this time frame, it seems like a stop loss, but I'll show you what's happening on this market. It seems like a stop loss. I would say the stop loss for me. Let it try. But then we'll see what's happening. Let's go down to our entry system now. That's our analysis. A bit of not a difficult one actually. But so many things to this one. So now if you pay the attention, okay, you're gonna understand what's happening here. But then if you're not, you gonna maybe you have to rewind. Let's see what's happening. Yeah, we have okay. So now we're having up moving, right? Like the type of movement is then sort of complicated now, right? Not complicated, right? Actually, my brush is running. Okay, let me just be quick on this one. Be quick on this one, guys. We're having a drop, right? It's kind of stick. Like we having like multiple structures. That's how entry system works. Right? Having like multiple, there's multiple structures or two main structures. Too many structures. This making showing you guys that's happening. Showing you for our entry. Of course, complicated one. Oh, and this one is a bit complicated. Looking at our left structures, right? Because now looking at this, the bottom. This is it's also right. It's our top. But then looking now at the bottom, right? Looking at the bottom, right? There's not a reason of end, right? But you look at this, it's like there are so many head and shoulders, but then there's no structure here, right? You can't say there's no kind of you wanted to this to be an entry now. Also coming down to this one, right? This could have been our entry now, right? But then looking at the stop loss percentage, it's bit of too much. That's bit of too much. Looking at our stop percentage, 0.16, that's too much for us, right? Which then our risk management strategy was gonna say no to the end, do not enter the end. Because now this is too much of a risk, risking too much now, which risking too much is gonna lead to you losing, right? And actually the risk management strategy allows us to not even take that loss, right? So now you find it find it helping now, right? In that in those terms, right? Because now a bit too much, right? A bit too much. It's not an inch, not an inch for us. Because I posted the video for like 2 minutes and I'm back on it. So now don't be if if you can hear that I was saying one thing and then I'm saying the other now. Please forgive me for what I was saying. Let's continue now as we were on this interest rate. This not complicated interest, but then this interest is not the usual type of interest, but then that we take, right? But then the reason now I'm considering it, maybe like 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 we were gonna take this interest now was because of it our left structures, right? We went right, and now as the market coming down passively, right? Came down impulsively now, making that a red candle on the H4, right? Making that red candle on the H4, right? And then it came down now because now you should in the now it came down now and made this type of structures, which is then why I was gonna consider taking that trade now. Because now it came down now making this type of structures now. Is then double bottom that is double bottom for us. But then after now, hours and hours now, the hours after maybe 2 hours, I think, hour and another hour. Yeah, I'm saying hours and hours. An hour and another hour, 2 hours. Sorry about it. Right, guys. No type of interact that you usually say, to be honest, right? Then, because now if there's a range, right, of what was happening in the market during this day, right? It was forcing us now to have our left structures marked, like waiting for us to make this end, right? Let's see now what's happening. Double bottom. Let me just mark it now. Focus focus on the right hand side, right? We focus now on the right hand side now, and we're having this structures marked, right? The market comes down now, making us have a double bottom, which then the reason for us maybe for taking that entry now. Now, as if you focus, if we were to focus on this left structure now, and then maybe there's not maybe, but then this was gonna be our entry now. Not even this candlestick, but the upside. This was gonna be our entry now. Let's put in the smart now, guys. You see now, this, remember that the structure we have it like on for each. For the structure on 4 hour now, right? And the structure on 4 hour, which we got from inside now. But then we now the structure now on the 4 hour now. Like the second structure. Then I'm gonna show you why I'm saying that's my second structure also. With that second structure also, guys. With the ends on that on that one. It is part as part of this something, yeah, it's part of this one. No, but like I can just put it here. Look at that that one. And then we see how it goes. See how it goes and how the entry goes. It comes in properly now. Now we're following now our right roads, right? It comes in properly now. Now, and follow our rules, and then it says, it puts us on an entry there, right? And this is, on an entry there, but then ranges around that entry now, like, looking like it's like on it, our stop loss button actually never hits it because now our stop loss it's here, but then it's way down now, then making us not even want to take that entry now. The reason right now is because 0.11. Oh, I thought it's way longer. It's 0.11. Okay, can I accept 0.11. 0.10 actually. Three that are less than 10. That's when we take. Don't 12. Okay, it's similar to the previous candle, right? Which was also 0.12. You see, we wait on our take profit. And see, and with our TP now and see what's happening on our TP now. Right. So second entry now. The type of entry now that we take now. And and skip on this entry. Let's try. Let's see. You can skip on the structure. Let's place the structure. Right? Don't ignore. Just please just mark. We call it like marking. Mark the structure that keep it there. Okay. Mark the structure. You can find another entry. We can find another entry. Now the market is closed now because now it's a Saturday. But then look at what's been happening previously, right? But then we're looking at it. As we're looking at it, I might have a close up. Right, guys. So, right, that's it, guys. Let's close it, guys. Also, now, I said I have a bonus for you guys. I have a bonus for you guys now. Here's the bonus for you guys now. As you remember, as we're looking at this entries now, right? Entries now, right? If you were closely. What about the disturbance, guys, and the background noise? Guys, forgive me, guys, please forgive me. What about that? Looking at the entries, right? Now we see now the structures now. Okay, you can mark it. At first I didn't say don't mark it. As the reason why I said do not mark it, right? Now so that you do not get confused. But like coming in into our bonus point, take note. Structures near our quarter point, mark them right. But mark them in terms of now. Take profit now. Right. Now when you take profit side of things, right? Now as we making that structure now, the market tends to break this quarter point now and move on to our the point where it's near, right? Which is then that's what I'm explaining now. There's an income, there's a near point now. This point is near the quarter point now. Market tends to stretch, right? Market tends to stretch and goes to that quarter point. So now which then gives us the advantage now to not advance the such pattern. Give us now. Give us more profits, right? Or the reason is of us to stretch our profits also now. So now we don't take profit, we don't stop your profits here. Stop your profits here. But then you increasing our stretching our profits as such. So the market stretching, so also stretch our profits. And same goes to upper now, upper. upper trade, not upper, it was next trade. I'm saying upper trade was now moving up now the screen, right? Right, okay, let me just continue. Right, moving up and releasing it. Leaving go, right? Which then help us now. It's not moving out. Same type of movement actually, or take profit system, or to what I was showing on this first one. Because now on the second, there's the same quarter point now for this. This was an entry, and then we are taking our take profit right here, right? It will take profit on the quarter point, but then now the market now, as it always does, going to that point, right? Because I was closing up to the quarter point now, or linked to the quarter point because of this engulfing, right? Now they've stretched our profits now, and way more now, right? Stretch our profits now. You get more now. You get to profit more now. Let's profit now more. And that's like that. And that's it, guys. That's our bonus point now. I think paying attention now. You can rewind, guys. Rewind quickly if you have to, right? If you didn't understand. Right, repetition is important. One keynote that I got from one of my mentors, right? Mentor, like for personal development, like personal development. Also work on outside of forex, guys. Also work on yourself. This Bob Proctor. He said repetition is important. Once you repeat it, it gets to be part of you, right? It's repetition is important, guys. Repetition, right? As you rewind, you're repeating it, and as you're repeating it, it goes onto your subconscious mind and it stays onto your subconscious mind. So now, even it automatically notice you notice what you have repeatedly put onto your mind. When it's on your subconscious mind, it's more not even on your. It's more. It's gonna benefit you more when it's on your subconscious mind, and it never gets to leave your subconscious mind, right? So yeah, 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 yeah. So, yeah. So now, okay. Before I close, let me just go back to this what we were looking at. Okay? So now this entry is not gonna even have maybe an entry on it, right? Because now okay, we still know where to close up. But now this close above gonna okay, we're gonna mark this close above only, right? But then the market continued but going to the upside. It didn't close above this this point, right? So now there's no reason of entry there around this area, right? But then if we were to make our take profit here, we're gonna consider this our next candle now an entry now, which is not an entry, right? Since our take profit system is allowing us to take profit there in more, right? But then the market comes back now and then makes it that structure now. A structure now becomes our reason of entry, the right there. Our reason of entry for this trade is still in movement. Do not go now to the market now and see now to enter that trade now. So now we enter where the market begins, unless you're getting close up or close below the same structures. Like guys, be smart. Just be smart with it, please. Smart with it, guys. So yeah, closing it, guys. I'm closing it now, guys. Sorry. Closing it now, guys. If the market comes now, okay, with a close above here, then take that short trade, right? Only with a close above here. then we're expecting the market to continue moving to the upside. And that's when you can take that trade. And besides that, do not take that trade. All right, let's show you some. Go on to maybe silver and silver. Same type of movement, right? That I was looking at earlier. Right? The same type of entry, type of movement, I would call it. Just looking at it, right? Because looking at this close above, step on it, right? So we're gonna. I was looking at this close above, right, guys? Mark the structure, right? This is my inner structure that I marked. Right, and I was looking at this close above, right, guys? The market was coming during this. This is on a Wednesday, right? It's on the 8th, right? The system works right for every pair. You can use it on any pair, right? For every or any index, right? Also Bitcoin, but in the quarter points now tend to be different now. Looking at this one, the quarter point is not on 250, but in the quarter point is on 500, right? This is how you mark it now, right? Start from it to 4,000, you mark it to 3,000, to 3,000. So that's just what I'm saying. Okay, it's a multiple series there. It's gonna be 324. Let's say 2024, just 24, right? 2024, then 20, then you 23, right? And that's 23.5. That's a 23.5. That's how you make it. That's how you make it. So there's no like your inner your, from the inside, like your 23 point 23 23.25, right? 23, no, 20, I'm wrong. 23.75. You don't mark that two structures. Do not mark that. Now, this is where we are. This is where we are. So now, looking at this entry now, close above, and then I'm done with quarter points, right? I'm moving. Let's come back to this entry now that I was looking at now. And look at how the entry came, guys. 15 in the hour of 8, right? Go back now. Our entry now, and you see our entry. And you can see, guys, how the market opened up in the entry, like entry candle, entry candle, entry candle, beautiful entry candle, right? Engulfing that. Even though it has like it had the market had those left structures, it didn't compensate to those left structures, but then chose to open that candle. Yes, impulse now. It just impulse now. If you were to put that your entry there, it's gonna be a problem. You can see now how big is it now. Just now entering as immediately now. Let's go back now to adding. Let me add another point now to it now. You can see that you have intervals at your 4 hour now. You have your intervals now. So now coming to the market way before way before go way before like 8. They come around past 7, and then be monitoring it throughout that time now. It's gonna help you now to catch this type of movement and catch it way lower now, right? As the market comes, you catch it and then you go to that entry now. Then you catch that entry now early then, and then get to see get your take profit now. You can see that. Beautiful entry there. Top entry. Top entry. The last and bit of effect. Let me close now. Showing you now. Silver, not just silver lines. System looks the same. It's quarter point. There's a quarter point there. Right, guys. Bye.